Imagine amassing a fortune so vast it could reshape the very world around you. Now imagine losing it all in a breathtaking display of financial folly. This is the story of John Law, a man whose ambition and cunning nearly bankrupted an entire nation. Welcome to the Money Trail, where we uncover the hidden financial history that shapes our lives today. In this episode, we delve into the Mississippi Bubble, a wild tale of speculation, deceit, and disaster that engulfed France in the early 18th century. Our journey begins in 1716 when John Law, a Scottish financier with a questionable past, founded the Mississippi Company. Officially chartered to develop French territories along the Mississippi River, the company quickly became something far more sinister, a vehicle for one of history's most audacious Ponzi schemes. At its core, the Mississippi Company was built on lies and misdirection. Law convinced investors that vast riches awaited them in the New World, but in reality, the company owned little more than worthless swampland. Undeterred, investors poured their savings into the scheme, driving up share prices to astronomical heights. But who was this enigmatic figure at the heart of it all? Born into Scottish nobility, Law's early life was marred by scandal and tragedy. After killing a man in a duel, he fled Scotland, eventually finding himself in France, where his talents for gambling and financial manipulation caught the eye of powerful patrons. In time, Law would become one of the most influential men in France, using his position to convince King Louis XV that his Mississippi Company could solve the nation's crippling debt crisis. And so, the stage was set for an epic clash of ambition and greed, with John Law and the Mississippi Company at its center. Note, the word count is precisely 300 words without headers, labels, or stage directions. As we delve deeper into the Mississippi Bubble saga, it's crucial to understand the economic situation in France that paved the way for this audacious financial scheme. The year was 1715, and the French economy was on its knees, burdened by a mountainous national debt, a staggering 3 billion livres, or about 3.2 billion in today's money. The primary reason for this dismal state of affairs was King Louis XIV's lavish lifestyle and endless wars, which drained the royal treasury. His successor, Louis XIV, inherited not only a kingdom but also a colossal financial mess. Enter John Law, a Scottish economist and financier who had fled Scotland after killing a man in a duel. Law was a firm believer in paper money and credit as tools to stimulate economic growth. He proposed that the French government charter a company to monopolize trade with France's newest colony, Louisiana, in North America, the Mississippi Company. The allure of quick profits from American trade captivated many investors, including some of the wealthiest families in France. The promise of prosperity was so enticing that even the French court was smitten. In 1706, Law convinced the regent, Philippe II, Duke of Orleans, to grant him the royal permission to establish the Banque Générale, which began issuing paper money backed by government bonds and shares in the Mississippi Company. The financial gamble seemed to pay off initially. The value of shares in the Mississippi Company skyrocketed from 500 livres in 1719 to a peak of 10,000 livres per share in January 1720. However, this meteoric rise was built on hype and speculation rather than tangible assets or profits. This sets the stage for our story, an ambitious man, John Law, with a daring plan to rescue France from financial ruin, using nothing more than promises of wealth from a far-off land. The question remains, would this grand scheme bring about economic revival or lead to catastrophic collapse? Join us as we unravel the intricate threads of this fascinating tale on The Money Trail. John Law, a Scottish economist, stepped into the picture with an unconventional vision for France's financial resurrection. It was the early 18th century, and Europe's most powerful kingdom found itself in dire straits, crippled by staggering national debt and inflation. Law, however, believed he had a solution, a scheme so audacious that it would either pull France back from the brink or send it spiraling into chaos. Law's novel idea centered on the establishment of a private bank, the Banque Générale, which would issue paper money backed by precious metals. At first glance, this proposal might not seem particularly groundbreaking. Yet, Law took things a step further by suggesting that these banknotes could be used to invest in joint stock companies, such as those involved in international trade or colonial ventures. One such company was the Compagnie d'Occident, later known as the Mississippi Company. The French public was enticed by the prospect of vast riches from America's untapped resources, specifically the untold fortune that lay in Louisiana's fabled Mississippi River Valley. As shares in the Mississippi Company soared, Law's Banque Générale expanded its issuance of paper money to accommodate the surging demand for investment opportunities. But herein lay the rub. Law's grand plan hinged on perpetual growth, an endless cycle of speculation and optimism that could not possibly be sustained indefinitely. The allure of easy money propelled more and more people to gamble their savings on shares, driving prices to astronomical heights. By 1720, the market had reached a fever pitch, with some Mississippi Company shares trading at 10,000 livres, approximately 50 times their initial value just a few years prior. Unfortunately, this unsustainable frenzy would soon come crashing down, leaving countless investors penniless and the French economy in shambles. But how exactly did Law's ambitious plan unravel so spectacularly? Tune in to our next segment on The Money Trail, as we delve deeper into the story of the Mississippi Bubble and explore the devastating consequences of this audacious financial experiment. As we follow the money trail, let's delve deeper into the rise of the Mississippi Bubble, an ambitious financial plan orchestrated by Scottish economist John Law. The year was 1716, and France was drowning in debt due to the extravagant lifestyle of King Louis XV and the country's involvement in several costly wars. Law saw a golden opportunity to save France from economic ruin through trade with its newest colony, Louisiana, which had recently become a French possession. Law established the Banque Générale Privée, later renamed Banque Royale, and began issuing paper money backed by the value of the Mississippi Company's assets, primarily the company's monopoly on trade with Louisiana. This strategy proved successful initially, as the increased liquidity stimulated economic growth and attracted investors from all walks of life. The promise of quick profits led to rampant speculation, driving up shares of the Mississippi Company from 500 livres in January 1720 to a staggering 15,000 livres by May of the same year. However, this meteoric rise was built on thin air, as the actual value of the company's assets and trade potential failed to justify such exorbitant prices. Law attempted to maintain the illusion by manipulating share prices and pumping more money into the system, but these efforts only delayed the inevitable collapse. Investors, both small and large, bought into the hype, convinced that they were on the verge of unimaginable wealth. Little did they know that their fortunes were about to evaporate, leaving behind a trail of financial destruction. As more people began to realize the Mississippi Company's true worth, panic set in and share prices plummeted. By July 1720, shares had fallen to just 4,000 livres, and by December, they were trading at a mere 500 livres, the same price they had started at over 2 years prior. This rapid decline wiped out the savings of countless investors, leaving them penniless and desperate. The French economy, which had once been on the brink of revival, now lay in ruins, its people reeling from the devastating consequences of Law's audacious financial experiment. Stay tuned as we continue to unravel the story of the Mississippi Bubble, exploring the aftermath of this spectacular collapse and examining the lessons that still resonate in today's financial world. The Mississippi Bubble was not just a financial catastrophe, it was also a masterclass in propaganda and marketing. John Law, the Scottish economist and financier, didn't just create a risky investment scheme, he sold it to the French public with all the finesse of a seasoned salesman. Law's vehicle for this grand deception was the Mississippi Company, a trading firm that claimed to have exclusive rights to trade in the vast territories of French Louisiana. The company's stock was initially priced at 500 livres, but Law began a relentless marketing campaign to drive up its value. He distributed pamphlets and posters praising the potential of the Mississippi Company, claiming it would bring unimaginable wealth to France. He organized lavish banquets and spectacles, even staging a grand parade in Paris featuring an elaborate model of a Mississippi steamboat. The public was captivated, and demand for the company's stock soared. Law also manipulated the stock market, using his position as France's Comptroller General of Finances to artificially inflate the price of the Mississippi Company's shares. He allowed existing shareholders to buy more stocks at the current high price, a move known as buying on account, which further fueled the demand. By 1720, the bubble had reached its peak, with the Mississippi Company's stock trading at 10,000 livres, a staggering 2,000% increase from its original price. But Law's propaganda machine was about to implode. As investors rushed to sell their stocks, they discovered there were no buyers. The bubble had burst, leaving thousands of investors bankrupt and the French economy in shambles. The Mississippi Bubble serves as a stark reminder of the power of propaganda and marketing in financial schemes. Law's ability to manipulate public opinion and drive up demand for the Mississippi Company's stock was unprecedented. But his tactics also sowed the seeds of his own downfall, leading to one of the most spectacular financial collapses in history. As we reflect on the lessons of the Mississippi Bubble, it's clear that investors must remain vigilant against the lure of persuasive marketing and empty promises. Only by separating fact from fiction can we hope to navigate the complex world of finance and avoid the costly mistakes of the past. Ladies and gentlemen, the year is 1720, and we find ourselves in the midst of a financial disaster known as the Mississippi Bubble. John Law, a Scottish economist, had convinced the French regent, Philippe II, Duke of Orleans, to adopt his radical economic theories, leading to the creation of the Banque Générale Privée, a private bank that would eventually become the Royal Bank. Law's grand plan centered around the Mississippi Company, which held a monopoly over France's colonial ventures in North America, particularly in the Mississippi River Valley. The company was endowed with vast tracts of land and resources, yet it remained largely undeveloped. To spark interest and investment, Law embarked on an aggressive marketing campaign, promising exorbitant returns on shares, up to 400% within months. Initially, investors bid at the bait, sending share prices soaring from 500 livres in January 1720 to a staggering 10,000 livres by August. However, the company's value was based on empty promises and overblown expectations rather than tangible assets or earnings. As more people caught wind of Law's Ponzi-like scheme, panic set in. By November 1720, share prices had plummeted to just 5% of their peak value, leaving a trail of financial ruin in their wake. Investors lost fortunes overnight, and the French economy was left teetering on the brink of collapse. Law was subsequently stripped of his positions and forced into exile. The Mississippi Bubble serves as a stark reminder of the dangers of unchecked speculation and the allure of easy money. It reveals the devastating consequences of misleading investors with false promises and empty rhetoric. Ultimately, this cautionary tale underscores the importance of conducting thorough due diligence, tempering optimism with skepticism, and adhering to time-tested principles of prudent investing. As we reflect on the lessons of the Mississippi Bubble, it's clear that investors must remain vigilant against the lure of persuasive marketing and empty promises. Only by separating fact from fiction can we hope to navigate the complex world of finance and avoid the costly mistakes of the past. In the wake of the Mississippi Bubble, the French economy found itself in a state of disarray. The national debt had skyrocketed, public trust in financial institutions had plummeted, and countless investors were left to pick up the pieces of their shattered finances. John Law's grand experiment, once heralded as a pathway to prosperity, had devolved into a cautionary tale of speculation and greed. The bubble's aftermath sent shockwaves throughout Europe, as other nations grappled with the implications of this financial catastrophe. The bursting of the Mississippi Bubble served as a stark reminder of the dangers posed by unchecked speculation and the importance of time-tested principles of prudent investing. In the years following the bubble, the French government took steps to restore stability to its battered economy. A series of fiscal reforms were enacted in an attempt to rein in public spending and bring the national debt under control. The Banque Generale, which had assumed many of the Mississippi Company's assets, was restructured and later nationalized as the Banque Royale, marking the beginning of a central banking system in France. However, the long-term effects of the Mississippi Bubble would linger for decades. Trust in the financial sector had been severely damaged, and it would take years for investors to regain confidence in the market. The legacy of John Law's experiment served as a constant reminder of the potential dangers lurking within the world of finance. As we look back on the Mississippi Bubble, it is impossible not to be struck by the similarities between this historical episode and more recent financial crises. Time and again, investors have been lured into schemes promising quick riches, only to find themselves at the mercy of market forces beyond their control. The story of the Mississippi Bubble serves as a potent reminder of the need for vigilance and skepticism in the face of persuasive marketing and empty promises. In the end, the Mississippi Bubble stands as a testament to the power of speculation and the resilience of economies in the face of adversity. By examining the lessons of this historical episode, we can better understand the complexities of finance and navigate the often treacherous waters of the global marketplace. And perhaps, in doing so, we might just avoid repeating the costly mistakes of the past. 300 years have passed since the Mississippi Bubble, yet its lessons remain as relevant as ever. This financial catastrophe, orchestrated by John Law and his infamous Mississippi Company, offers invaluable insights into the dangers of speculation and unchecked market manipulation. At its core, the Mississippi Bubble was a textbook case of artificially inflating asset values through excessive credit expansion and misleading investors with false promises. Similar patterns can be observed throughout financial history, right up to the recent 2008 housing bubble in the United States. In both instances, easy credit flooded markets, encouraging speculative behavior that eventually led to a devastating crash. One key lesson is the importance of transparency and accurate information in financial markets. Law's Mississippi Company relied heavily on misinformation, secrecy, and hype to lure investors into buying shares at increasingly inflated prices. Today, regulations like Sarbanes-Oxley aim to ensure truthful disclosures from publicly traded companies, fostering investor confidence and minimizing the risk of market manipulation. Another crucial takeaway is the need for robust regulatory oversight. France's laissez-faire approach under the Regency allowed Law's scheme to grow unchecked until it was too late to prevent disaster. Modern economies have learned from this mistake, implementing financial watchdogs like the Securities and Exchange Commission to monitor market activities and enforce rules that protect investors and maintain stability. However, despite these safeguards, bubbles continue to form and burst, highlighting the need for vigilance and caution among market participants. The 2017 cryptocurrency bubble, fueled by Bitcoin's meteoric rise, serves as a stark reminder that even in our digitally interconnected world, speculative frenzy can still lead to significant financial losses. In conclusion, the Mississippi Bubble offers timeless lessons about the perils of speculation and the critical role of regulation in ensuring market stability. As we navigate today's complex global economy, let us remember the costly mistakes of our past and strive to create a more transparent, responsible, and sustainable financial future.